ourselves what the company is all about. So just give me some little time to do that. All right. So good afternoon, everybody. Like I said before, my name is Mr. Emmanuel from Learnity. An educator, instructor, a teacher here at Learnity. Now, what is Learnity all about? And Learnity is an online leading edtech company dedicated to revising financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience, through comprehensive courses on Forex, stocks, investing, money management, and financial planning. We empower our clients with the knowledge and confidence to navigate the financial world with ease. So that is what we are all about. Now, moving forward, in this webinar, we're going to talk about how to place your first trade without losing your mind. Now, I know most of you are new traders. Is that correct? Most of you are just coming into the Forex world, the trading world, and probably you're going to pass through this same process of placing your first trade. Now, today's webinar, we're going to talk all about what you should do, how to calm yourself during this situation, what you need to know, what you need to do so that you won't mess it all up. Now, first of all, let's discuss the reality of your first trade. Now, take for instance, you analyze the market, finally find a setup. Then you click on sell or buy, either one. Maybe you see, a buy setup or a sell setup. Then it's time for you to click the buy or sell button after your analysis. Now, after clicking the buy or sell button after your analysis, you instantly start doubting yourself, start doubting your analysis. You start asking yourself, what is wrong? What if I'm wrong? Should I close now? Or what if it reverses? And before you know it, you've either closed too early or you held too long. Now, this is the situation most new traders usually find themselves inside. That is when they are trying to place their first trade. This is what they usually experience. You're going to experience doubts. You're going to experience, so many things when you're going through this phase of your trading career. Now, in this webinar, like I said, this is the topic that we are going to be discussing. We're going to be looking at ways you can avoid, that is steps you can take to actually avoid being in this situation when it gets to the phase where you need to place your first trade. So, this is something that we all as traders are going to face. Now, what helps most traders or some traders is having or knowing the steps they can take to actually overcome this situation. Now, that is the steps we are going to be talking about in this webinar. Now, this is the real problem. The problem is in the market. It's uncertainty. You don't fully trust, number one, your strategy. You don't fully trust your analysis. And you don't fully trust your risk. And that's what makes your mind doubt itself. That is what makes you, as the trader, doubt yourself. Because first of all, you are not sure or you don't trust your strategy. Even your analysis, you don't trust it yet because you are in self-doubt. And also your risk might also be a factor. When you're over-risking, it usually brings about this doubt or fear, if I might say. So it brings about fear when you're over-risking. And if you doubt from your strategy or from your analysis comes from you not being able to use the demo account to test your strategy. That is not testing your strategy for to confirm its effectiveness in the market. That is one thing that also brings about this problem. So when you doubt your strategy, when you doubt your analysis, it's probably because either you skipped the learning process. That is, instead of testing that strategy out for a longer period of time on a demo account or load up a small account, cent account. Like so many brokers have cent accounts now that you can use to test our strategies. If you don't want to trade a demo account, we have what we call cent accounts. So you can also use that to test our strategies. right? When you don't do this right, when you skip these steps, because most traders usually skip these steps, because why? They want to, start trading. Probably um, um, they are seeing professional traders pull out, profits from the market, and they also want to have, that. They also want to feel that they also want to be a part of that. Therefore, what they actually do is the mistake of skipping that learning process. The learning process of you testing out your strategy, testing it on a demo account or on a center account so that you can actually have a feel for what it would be like when you start trading live. That is why when you skip that process, when you skip that part of the learning curve and you go straight to the live funding phase, the live trading phase, then you take a setup. That is where this problem starts. You start doubting yourself because you've not had or you've not built confidence in your analysis or your strategy because you skipped the learning curve. Then, as for risk, probably because you're over risking too much. Now, over risking too much, over risking in trading usually comes from either you have a low capital or yes, still on the low capital, is that you have a low capital and you want to, you've seen trades online, people posting their trades, thousands of dollars, and you've seen people flipping from $100 to $30,000, from $30 to $2,000, and you also want to do that. Typically, flipping is not what trading actually is. It takes a whole lot of skill sets or a whole lot of capital, physical capital to actually make flipping work for you because more times than not, when flipping, you're going to blow accounts. So you should have that in the back of your mind that you're going to blow accounts when flipping. But for newbies that are coming to the market, they think, or when they see these screenshots, they think flipping is doable. Yes, it's doable, but there are some conditions that have to be met for it to be doable, and it's not even advisable, even if it's doable, because in the long run, you're going to lose much than you make, right? So you might, let's say, in a trial of 10 times, you want to flip, you might get, because in flipping, you are risking your whole account. You're trying to risk the whole capital to see if you can make, a higher profit. So that doesn't make sense because in trading is not a sprint, it's actually a marathon. So it's not about how far, sorry, it's not about how fast, but how far can you go. You preserve your capital to you can become a profitable trader. That's the first rule of trading: preservation of capital. So let's move forward. Now, this here we're going to start talking about steps you can take to avoid being in this situation, to avoid, this situation of doubting yourself when you're taking your first trade as a new trader. And the first thing you need to do is to reduce your risk. For example, if you are trading $100, your risk should be $1, which is 1% of your account. If you are trading $1,000, your risk should be what, $10, which is 1% of your account. So we all know, or I always say this, that trading is a capital intensive business. When I say capital intensive, I mean that it all depends what you are going to be able to make from trading. It all depends on your physical capital that you bring into trading. You can't compare someone that has a $1,000 account capital, that is a $1,000 account, to someone that has, let's say, $50,000 to $100,000. Their income are not going to be the same. Why? Because of the capital difference between both traders. On one hand, one trader has $1,000 account. On the other hand, the other trader has a $50,000 or $100,000 account. Now, 1% usually what we say, or the ideal amount or the ideal percentage to risk as a trader is usually 1 to 2%. Or if you're a new trader, you can reduce it to 0.5% until you are very sure of your strategy, right? So that you won't get burned out. So when you're risking 0.5, even if you're taking losses, you still have time to, you still have enough capital at the end of the day to look at what you're doing wrong, correct it, and, keep on trading. All right. So 1,000, sorry, 1%, 2% is usually the ideal risk. Now, for someone that has a $100,000 account, the 1% to 2% of $100,000 account is $1,000 to $2,000, right? And the 1 to 2% for someone with $1,000 account is $10 to $20. Now, if you're risking $10, maybe let's say your risk reward ratio is 1 to 2. If you're risking $10, you're probably getting back $20. Now, for someone that is on the $100,000 account, if they're risking $1,000, they'll probably be, if it's risk reward ratio of 1 to 2, they'll actually be getting back $2,000. Now you can see that there's a huge difference in what these two traders make, typically because the account sizes are not the same, the capital are not the same. This is one factor that you need to know. That trading is capital intensive. Where most traders have these issues, where they have lack of funds, lack of capital. They start with $500, $100, and so on and so forth, and they want to scale up immediately. That is not the plan. If you are bringing that kind of capital into the FX market, your first thought should be, first of all, growing the account and not making profits. Because let's get things straight, the amount you're bringing in is not enough to give you a convenient income. If trading is going to be your main source of income, you should be able to give it the required capital it needs to give you your required return. So your required return should be based on what you want to get, or the amount you need to pull out of the market on a monthly basis. So once you know that, you do the math, then you know the kind of capital you need to impute to get what you want out of that trading account. So that is just what you need to know when funding an account. So if you're trading a $100 account, your risk should be $1, which is 1%. If you are trading a $1,000 account, your risk should be $10, which is also 1%. When your risk is small, your emotions calm down. Now, 1% is usually, that's why we say that 1% is usually the ideal percentage you should usually risk on your account. Now, 1% is not small. It's not small at all. It's just that it's going to be dependent on the kind of capital you have on your account. For $1,000 account, probably you might see it as a small amount, which is because the 1% of that $1,000 is $10. For someone, just like this analogy I gave you before, for someone on a $100,000 account, the 1% is going to be $1,000, which is a huge amount of money if you convert it to our currency. Now, the next step is to plan before you enter. And before you click that button, you should already know everything. You need to know your entry points, your stop loss, and your take profits. Now, this is very, 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 very important when you are trying to get into a trade. Plan yourself, plan the trade on time. You don't get into a trade and you start wondering, oh, where am I going to put my stop loss? Where am I going to put my take profit? These are things that you should already know before you enter the trade, right? You should know this already. You should have it in the back of your mind before you take the trade. You should have your entry planned out. You should have your stop loss planned out. You should have your take profit planned out. Now look at this example here now. We have this example here. You can see how in this example, the take profit was already planned out. The entry was planned out. The entry was here. The stop loss was here. Now this was a risk reward ratio of 1 to 2.7 or so, almost a 3-hour trade, right? And you can see that in this setup or in this trade, the entry was already in here. Why? Because we had a fair value gap here. Now this is a fair value gap because this was a fair value gap. We are bearish on this market, right? Because we're creating lower lows and lower highs, lower lows and lower highs. Now we had the market return back to the fair value gap here. And usually how we do trade, or our model of trading here, when we are trading, we usually put the stop loss. If it's a setup, usually where's that noise coming from? Please can you mute yourself? We usually put our setups, our stop loss above old highs, right? So let's say this is the previous lower high. Our stop loss goes above this lower high. That is how we do set our stop losses. Then for the take profits, it all depends on you as a trader. So for my own style of trading, I usually go for a risk reward ratio of 1 to 2 risk reward, and that is why you see this our our take profits will be times two of what of our risk. So that is typically how you do it. Before you get into the trade, you plan your risk, you plan your entry. You should already know these are important things that you need to know. So that when you get into the trade, you won't start doubting yourself. You won't start saying, "Oh, I shouldn't have gotten into this trade," or not being sure of that trade. You should have these things. These are the most important parts of the things that you need to have in your arsenal before you even get into the trade. So you need to plan out your entry, your your the stop loss. And now that stop loss is going to be very, very important because that is what will determine your risk reward ratio. If you are someone that uses a risk reward ratio and take profits like me, and it's also important because that the stop loss is what's going to determine your risk. Without knowing the value of your stop loss or how many pips is your stop loss, you cannot calculate your risk. I don't know if you guys are getting my point. You can't calculate your risk because to calculate your risk, you need to have that value of your stop loss to know, okay, what's the lot size I'm going to use on this particular trade that won't surpass that 1% that you want to risk. So that is one thing that you need to have in the back of your mind. Now, moving forward, the next step you should take is to accept that the next step that you need to take is to accept the loss before you enter any trade. Now, this is the part most people skip, but it's actually the most important part. Before you enter a trade, ask yourself, are you okay losing this money? This is a very, very important question. Ask yourself this question. Are you okay losing this money? If the answer is no, don't take the trade. If you don't like a trade, if you look at the trade and you calculated your risk and everything, and you feel uneasy, taking that risk, losing that money, the best thing that you can do for yourself is to what? Don't take that trade. If you're not convinced on that trade, don't force it. Right? Do not force it at all. Just let it be. You need to trading is more of a psychological business than a physical business. Right? It's more of what's going on up there. So if you find you do not feel easy, like you do not feel good about taking that risk, so you don't need to take, just let it be. There'll be other trades. The market is going to be open to for like 24/5 because it's open 5 days a week, 24 hours, right? So if you don't get into that trade, there'll be other ones that might seem more appealing to you than that particular trade that you are looking at currently. So you don't need to, stress yourself on that kind of thing. You just need to let it be. The next trade is going to come by, and probably if you feel good about that, the next trade can take the next trade. Now you need to stop watching everything. One of the fastest ways to lose your mind is to stare at the chart. Every small movement feels like a reversal, and every small movement also feels like danger. So what should you do? Number one, you need to set your trade. Number two, you need to walk away. Now, this doesn't apply to everybody. Some people have that tendency of looking at their charts and not feeling anything, just looking at price prints. Then some people, especially when you're a new trader, um, you're just getting to do this for the first time, you might actually panic when looking at the charts after entering a trade. You might feel uneasy after you get into a trade and you see price and you are watching price moving. It might trigger you to what? Close the trade. Right. So if you are the kind of person that you can't stomach price, like that is price movement, looking at price movement after getting into a trade. Once you get into a trade, you are too attached to what's going on around your entry, what's going on the trade you got into and everything. The best thing you can do for yourself is to once you take this trade, after taking the trade, just walk away from the chart. Like just walk away from the chart. You don't need to stress yourself much. Just walk away from the chart. Now these are things that will help you if you're just starting to do this newly. It's going to help you build confidence time after time. Now, the next step that you can take is to think in probabilities. One trade doesn't define you. Even the best traders lose trades. What matters is over time, you win more than you lose. Now, this is the mindset every trader should have. This is the mindset every professional trader has. It's not about one trade. It's not about two trades. It's not about three trades. It's a matter of all trades combined. What do you get? Do you lose more than you win, or do you win more than you lose? That is what we call thinking in probabilities. So how do we do this now? Because me, okay, let me take me for instance. The way I do this is this: for after going through my own trading plan, my trade history, I've seen that I trade only one instrument, and because of I'm trading one instrument, I'm a day trader. I don't actually scalp. In a month, I might be averaging up to six, five, seven setups in a month. So what I look at the end of the month is that out of those six, five, or seven setups, sometimes on a good month, I average up to 10 setups in a month. Now, what I look at the end of the month is okay, out of these six setups that I got into for this month, how many did I lose? How many did I win? Sometimes I lose one and win five of those trades. Sometimes I win four and lose two. Sometimes I lose three and I win three. Now, when I lose three and I win three, my win rate is at 50%, but my risk reward ratio is 1 to 2. So let's say I'm risking $100 per trade. If I win three trades, I make times two of the $100, which is what uh $600. Now the three I lost is $100 each. That is $300 if I lost the three of them. Now at the end of the day, I made 600 from my wins. My loss was 300. If I minus 300 from 600, I still have $300 left. Like I still have $300 profit. That is how you should think as a trader, not letting one setup define you. What you're looking for is the total sum of it. Are you looking at it on a monthly basis, on a weekly basis, or on a yearly basis, on a quarterly basis? That is the mindset you should have, because that is how professional traders do this. This is how trading is supposed to be done. So let's look at what a calm first trade looks like. Now, a good first trade is not about profit, it's about discipline. Ask yourself, do you follow your plan? Do you respect your stop loss? Then did you let the trade play out? That's a win, even if you lose money. So even if you lose money after checking all these boxes here, that is a big win for you because you followed what your plan, your trading plan, right? You followed your trading plan to the T. If you're a new trader and you're actually contemplating on getting into a trade setup for the first time, if you have, you know, your strategy, you've done your analysis, you've done everything, what you should then ask yourself is, are you following your plan? Are you respecting your stop loss? And you didn't let the trade play out? That is after you must have gotten into the trade and the trade has played out. These are the things that you need to ask yourself after that trade has what? After you close that trade, whether be it in profits or in losses. These are the things that you need to ask yourself after getting into that trade. You need to ask yourself, oh, okay, did this trade play out in my favor? Did I follow my plan? Did I move my stop loss prematurely out of fear or out of panic? Did I let the trade play out the way it's supposed to play out? If I had a risk reward ratio of 1 to 2 at the beginning of the trade, did I let it play out till it got to my take profit level? Or even if it hit stop loss, did I close it along the way? Or did I close it too early? That is what you need to ask yourself as a new trader getting into the market, taking your first trade. Um,
Yes. Yes.
can you mute yourself,
Yes.
please? All right, so that is what you need to ask yourself when you get into as a new trader coming into the market. These are the questions you need to ask yourself. Now, um, if you look at the comment section of the webinar, you're going to see some links there. Now, I think we should have our course link there. Now, this course link, if you are a new trader getting into the market and you want help, learning a strategy, a very conducive strategy, a very good win rate strategy or mode of analysis, you can take up any of those courses. Now, we have courses tailored to bring you up from a beginner to an intermediate to advanced trader. There are lots of trading models there that can uh, help you in your trading journey. Just like this example we talked about here. Now, if you look closely at this example, this trade was gotten with the smart money concept. Basically, that is what we teach over here. That is the model we use. That is the model we teach. And we teach it in such a way that you grab it little by little. You're going to understand every core concept of it, starting from the basic concept to the advanced concepts. Now, in this, what you actually use to frame this trade is simple. I'm going to go through it again so that you guys will see how we frame this trade. This is a downtrend. Now, why is it a downtrend? Because as you can see here, they're clearly going lower, creating lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, and lower low, right? Now, when we came here, when we looked at this trade here, now this trade was gotten with the concept of time and price. Now, the time has to align with the price also for we to get into this trade. Also, before getting into the trade, everything I've taught in this webinar so far, knowing your risk, knowing your entry, knowing your take profit level, you should already know that. Right? Now we have our resistance area. Now, what is resistance? Resistance is basically a ceiling. Support is like a floor. Resistance is a ceiling that where price gets to, it has tendency, like it's very, very hard for it to go above that area. Same for support. Support is an area on the chart where if the price gets to, it has a very, very low tendency of passing through that area. Instead, it bounces from that area and continues its overall movement. So for this now, this is a resistance because resistance acts like a ceiling. Now you can see how price came up to this resistance area. Consider how it had a very, very hard time getting past this area. Trying to get past it the first time, it's rejected backing. Tried it the second time and rejected backing. Now, this was Euro USD, and usually we have a very specific time for trading this currency pair. Now, what happened here? We waited till that particular time of the day, trade Euro USD, which is the New York session. Waited for that time. We already had our eyes fixated on this area, which is the resistance area, the fair value gap, because we have a lot of POIs when it comes to smart money concepts. We have the fair value gap, we have the fair value gap, we have what do we call it? We have the order block, we have the breaker block, we have the delivered in balance price range, and so on and so forth. Now, all these are being taught in our courses. To once again to get any of these courses I'm talking about here, if you click on the link in the comment section, you should have the links listed there. The links to our Telegram group is also there. So if you're looking for a community to join to get more knowledge, we usually give out free educational materials on Telegram channel on your Telegram community. So click on the link to the Telegram community to join the Telegram community and receive these freebies that we give out in the Telegram community. Purchase the courses, the links should be also in the comment section where you can click, we go through the different courses we have and you pick one that suits your needs. So over here, we are back to the trade example. This was the fair value gap and this was the point of interest we decided to use for this trade because that was what was available to us here. Now, after that, what do we do? We already know that our entry is going to be anywhere in this box. So once it's New York session, we're coming into the New York session, we are looking at this and price was at this area here, which is why our entry was at that area. And like I said, in in our trading or in our model, we take the distance. We do take the stop loss. Our stop loss are going to be set depending on if it's a bullish or bearish setup, depending on if it's a sell or buy setup. Stop loss are going to be below or above the previous old high. Now, for this setup here, the previous old high was here, right? And for buy setups, it's going to be below the previous old low. For the sell setup, it's going to be above the previous old highs. Now, for this setup here, the entry was going to go above the previous old high, which was here. So that was why the stop loss was what above here. Now, the take profit is going to be based on you, the trader. For some people, they go for a risk reward ratio of 1 to 1. For some people, they go for a risk reward ratio of 1 to 2. Now, for other traders, they go for 1 to 3. It all depends on your. Some traders use some areas on the chart, like some traders are going to be using old high or some. Let's say if you're going to be using old highs as probably old highs because of liquidity concepts. So old highs act as targets when taking trades. That is old highs and old lows. For some people, they will be setting their take of it at this old low or this one, or even this one over here or this one. It all depends on your preference. So for me, it's easier, or I prefer using the risk reward ratio method of taking profits. So my entry was here. Stop loss goes above here, which is above the previous old high, and what the take profit goes at a risk reward ratio of 1 to 2. So probably this is 1 to 2.79. So this was around here. I should be taking my profit around this area here. That is what you see. So you can see how this trade was, very, very straight to the point. No confusion there. We already knew what we're looking for. We had our zones mapped out. We had our entry, our targets, our stop loss value being, set already even before getting into the trade. Now, this is what you should know as a beginner, because as a beginner, these are the mistakes beginner traders usually make. When they get into this, they do not know most of these concepts, and they end up blowing accounts because of this, easy, these are basic concepts that everybody should know. Just like I was talking about entries and stop losses, most traders don't even calculate stop losses before entering the trade. And stop loss is actually more important than the take profit level. That's just the truth. Because when you need your stop loss to calculate your risk percentage without having your stop loss value in mind, you don't know how much exactly you are risking. And even me as a beginner, I made these mistakes. I made it like I had this habit of always sticking to a specified lot size, even without calculating my my stop loss. So when I got into trading operation, I was always using 0.10, which is probably $1 per peak movement, if I'm correct. Yes, $1 per peak movement. So once I say setup, I want to calculate the stop loss. I'll just use 0.10. That's 0.10 lot size and get into the trade. But it was making me lose money because sometimes my stop loss might be 10 pips and I'll lose $10. Sometimes my stop loss might be 20 pips and I'll end up losing $20 on that trade if you hit stop loss. Sometimes I would have a bigger stop loss amount of like 40 pips, and I will end up, if you hit stop loss, I will end up losing $40. So my risk was not constant. I will lose $10 on this trade, I'll lose $20 on the next trade. The next trade I will lose $40. It wasn't constant. And that's very dangerous because you need to have these things planned out already before getting into a trade. These are the things that you need to have planned out. You have them on your trading plan, because you cannot be profitable when you are having inconsistent results. Right? When you're having inconsistent results, someone that has their trading planned out, let's see, someone that has that's always risking $10 and gaining $20 back. That's, even as a beginner, that person is going to be profitable later on, because they're already being consistent in their habits, in their trading, in their trading habits, in how they trade. compared to me then that was doing okay on this trade I will risk 10, 20, the next trade is 40, even without knowing what I was doing. So this is why we are teaching these things here, because these are the, we are actually teaching these things from experience, because this is what we as beginners, traders in during those period back then in 2014, 2015, this is what we were experiencing. This was our mistakes when we got into trading of recent. So that is why we are making most like teaching these topics, so that we can avoid these mistakes. We can help newbies coming into this newly to avoid these mistakes. So I think that will be all for this. Like I said, what one thing you need to do when trading as a beginner is thinking in probabilities. I've explained this before. You think about the as in you think about it in this way. At the end of the day, how many trades am I losing and how many trades am I gaining? That's the mindset of a professional trader, not, oh, I just lost this trade today. And you allow that one trade define your trading. No, it's a marathon, not a sprint, right? It's a marathon. It's who is going to hold out the longest, which is why we always preach this preservation of capital. That's the first rule in trading: preserve your capital. How do you preserve your capital? By having a good risk profile. Now, when you say a good risk profile, by having a particular, by being consistent in your risk. If you're risking 1%, you stick to 1%. If you're risking 2%, you stick to 2%. Define your risk before entering a trade, and you stick with that risk till some. Even if you want to increase it, that should happen after a long period of time, be it 6 months to a year, and not, oh, this month you're risking 1%, next month you're risking 3%. No, that's not. You're not going to be consistent. You need to approach this with consistency in mind and thinking in probabilities. At the end of the month, how many wins and how many losses? That is the question you should be asking yourself, not just, oh, this one trade didn't go my way, this, that, and that's the way it's. Before you know it, you're already making mistakes you're not supposed to make. So that is one thing you should have at the back of your mind. Now, for me to take you to our platform, which is coinlenity.com. So just give it a little bit of time to load. Now, this is our platform. This is our site. Now, what you need to do when you're on this site is to create an account. You actually need an account to navigate our platform. To create an account, what you need to do is to come over here and click on the diamond icon here. Now, when you click on the diamond icon, that should take you to this page right here. Now, on this page, this is the sign up page. Oh, sorry, I'm already logged in. I need to log out to show you guys how to, create an account. So now to create an account, there are two ways of doing this. You either use the traditional way, or you go with the easy method of just clicking on continue with Google. Now, when you click on continue with Google, that should what? Okay, sorry about that. First of all, you need to come over here, because when you click the diamond button here, there's a diamond button. It's the button for creating an account. This is what is going to show you actually when you click on the diamond icon. Well, it showed you the other page was supposed to have already logged in already. I logged out, so it brought me back to the sign in page. So when you click on the diamond icon, it should bring you to this page. See, there are two ways of signing up. It's either you continue with Google. So if you have a Google account logged in on your phone or on your computer, what you just need to do over here is come and click on continue with Google. That should automatically do everything for you. You don't need to go through much hassle. Now, if you're using the other thing, let's say you don't have a Gmail and you want to use the traditional method, this is the method where you need to fill in your email, password, first name, last name, nickname, and phone number. Then you click on this checkbox to agree to our terms of service and click on create an account. And when you do that, you'll receive an email. And now that email will ask you to click on the link to verify your email address. So once you do that, that should activate your account. Now to sign in, what you need to do is to come over and click on your login button. Probably that will now bring you to this login page that you saw before. So once you are here, if you signed up with the traditional method, you can input your email and your password and you log in. Then for me, that actually signed up with the Gmail, What I need to do is just come over here and click on continue with Google. That should bring up this, this box for you, going to select the Gmail account you used to sign up and allow that the Steam, just give it time and it's going to log you into your account. So over here, probably what I'm going to be taking you guys through is the courses section. And before we go into that, this is the link to the community area. So if you want to join the community, the Telegram community, to get more free educational materials, you can do that by clicking on this link and joining the Telegram community. And also, I would also want to talk to you about the rewards program that we have. Now, the rewards program, this is where we reward our users for interacting with our educational or educational programs. Now, if you click on the rewards section, it should take you to this area here. Now, what we actually do here is to reward our members, our users, for interacting with us. So you are going to get tokens when you watch these educational videos that we have here. There are so many educational videos we have, and we're still uploading more. These are educational lessons. So you are going to earn tokens. As you can see, if you watch this, you earn 2 tokens. You earn 2 tokens when you watch this video, and so on and so forth. So when you earn these tokens over time, when you accumulate a larger number of these tokens, you are going to be given. You can use these tokens to actually get a price, be it discount on the courses, a one-on-one consultation with a mentor, and so on and so forth. These are the various prices that we have here. I think we also have cash prices also. So these are the prices that you can earn if you take advantage of the reward section of the Learnity's personal learning area. And going back to the dashboard, let's go to the courses. Before we go that, also know that we have our mentorship program also. So if you are interested in a one-on-one mentorship, this is where you need to go to get that, a one-on-one private mentorship. Then for the courses, you need to come over here and you click on the courses to actually get to the courses section. So these are the courses we have. We have the signature and the premium courses, also known as the VIP courses. The big difference between both of them is the lessons taught in it and the support. Now for the signature courses, these are beginner-friendly courses. If you're getting into trading as a newbie, these are the courses that can help you build those foundation that you're looking for before transitioning to the advanced or premium courses. Now, these courses, you're entitled to what we call a signature support. And this is where you place in a group with your fellow students, where you'll be able to ask questions and you get your answers and interact with one another. And for the premium courses, these are the all-in-one courses that takes you from the beginner perspective to an advanced trader. Now, when you get these courses, you are entitled to what we call the premium support. And the premium support is where you are going to be placed in a group with your fellow students, where you can interact, ask questions, and so on and so forth. And also, you'll be entitled to a one-on-one webinar with the mentors on a weekly basis, where you can ask questions on what you do not understand and get answers real time. So that is the major difference between both of these courses. Right, so guys, I think that will be that is all about it for our personal learning area. Do you have any questions based on what I just taught here? Hello, any questions from anybody? You can unmute yourself if you have any questions to ask. Please ask your questions, and I will be very happy. I'll be obliged to give you answers. Hello? No question at all from anyone? All right. So in the absence of any question, I would like to thank you all for coming to the webinar. I hope that I've been able to bring value with this webinar, to bring you value. If you've learned one thing or another, I'm happy that you did learn that. And I would like to see you all in the next webinar, probably next week. So that will be all for this webinar. I will see you all in the next one. So bye for now. You can leave the You can leave the meeting. You can leave the webinar if there are no other questions to ask.
Learn and earn with Learnity. Ready to boost your knowledge and get rewarded? With Learnity, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn Learnity tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with Learnity today and make every lesson count.